Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets on Thursday, the 3rd of June. Bit of a thin day, perhaps people enjoying the half term and the sunshine rather than enjoying the small cap space. But starting off with advanced oncotherapy, and here we've had a gap to the upside through the 200-day moving average at 36 pence, hence the reason for the inclusion today. We've got high support for May, June versus November, December. I suppose we've had another rebound really from just below the 200-day moving average, which is what advanced oncotherapy has tended to do over the last year. The view is that we're probably looking for a weekly close above the 200-day line to then open up the prospect or the possibility of a retest of the initial 2021 resistance through 50 pence, and that could be seen as soon as at the end of next month. Obviously, the bull argument only really valid while we hold above recent intraday support for the shares around 32 pence. So above 32, looking for 50 pence plus over the next couple of months. Always good to see the next scenario, which will be evident on the Cyanconnode chart. People ask me where do I get my trend lines from, and I'm not quite sure whether that's a polite question or not, but I suppose the simple answer is 35 years of looking at stocks and markets. But here we had a line of resistance there from July 2019 that was suggesting that we could see a 12 pence plus target for Cyanconnode over the near term, and that's what we've got today. And we should see further upside while the shares hold above the previous resistance, I suppose last month's peak, or April peak rather, around 8.85. If you are ambitious regarding the stock and think it could climb a little bit more, then favored destination at this point would probably be up towards a line of resistance I'm just drawing at the moment, up towards the 21 pence area. That's from April last year, that resistance line projection, and that could be seen over the next couple of months, and maybe by the end of July if all things go well. Otherwise, probably consolidation in the 10 to 12 pence area first, as the RSI allows itself to cool off. But a very strong move today. Read yesterday that cannabis-related companies or CBD-related companies were improving in the US, and that's even fed through to the likes of Cellular Goods, a synthetic CBD company. Here we had a full storm for the shares at the end of April, and I suppose that took us towards 10p. We never quite got there. Now we've got another falling wedge breaking the 20-day moving average and the 7 pence level. Probably want to see a break of the 50-day moving average if we want to be fussy, especially given the full storms that we've had before. 50-day line currently at 8 pence, so an end of day or end of week close above 50 pence could do the trick in terms of Cellular having a lasting rally through 10 pence. Best case scenario target at the moment up to 15 or 16 pence, which is the top of the broadening triangle from March. But that also, well, that currently seems a long way away. Probably want to see the 50-day line broken first. The other positive, which is worth noting in terms of the latest recovery, is the bullish divergence here. So we had lower price lows from April going into the end of last month, but the RSI lows have actually been either the same or higher. So that could be the sign that we're finally on our way in terms of a lasting rebound for Cellular Goods. Let's see what happens there. Stock which is not quite such a frequent flyer on the Bulletin Board Heroes is Caspian Sunrise, which is chosen as much for its poetic name as anything else. Here we've got the consolidation the shares have had between 2 to 2.5 pence over recent months, basically since the end of the year. Want to see a weekly close through 2.5 pence to open up the prospect of 3.5 pence at the top of that rising November trend channel. Upside valid or recovery valid while we hold above the 50-day moving average at 2.25 pence on an end of day close basis. Only back below 2 pence, obviously really cancelling the recovery argument there for Caspian. Stock which hasn't appeared here for quite a while for obvious reasons. The fact that it was falling or drifting is JKOG Oil and Gas. Amazing that the shares had to come back from 40 pence down to, what was that, 17 or 18 pence last month. But that's the nature of the small cap market. But small oilers rising with the crude oil price, maybe that'll be the driver for any recovery here. We've got the 50-day line at 22 pence and an end of day or a weekly close above that could be the sign that shares are at least ready to head back towards March resistance at 30 pence over the next month or so. Stop loss back below 20 pence on an end of day close basis. On to a stock which has been rather better over the near term, Mobility One. Here we've got a situation where it looks as though the shares are actually accelerating. We had that brief spike towards 50 pence last month, but current situation is that we bounced actually above the 20-day moving average of 27 pence, which is a pretty bullish sign. And at least if we get an end-of-day close above the last May resistance at 34 pence, or rather, around the 37 pence level, rather, then we can see the shares head up towards 52 pence at the top of that rising trend channel from December as soon as the end of this month. So looking pretty impressive on Mobility One at the moment. Stock which took a long time to get its act together is Mediazest, but we've had a few spikes here, both in February and in March. Current situation looking a bit better in the sense that we've had support coming in above the 200-day moving average at 006 there, and we've broken that line of resistance from March. Obviously, there's nothing to stop the shares just rallying up towards 0.14 or 0.16 and then coming back down again, but perhaps it's third time lucky for the stock with these multiple support points above the 200-day moving average. If you can hold above 0.06 in the 200-day line, the upside here could be up to 0.2 pence as soon as the end of next month, however brief that meeting with that level may be. On to another stock which is coming back in a more positive way, MGC Pharma. Here we've had a breakout of this falling wedge, rather large falling wedge from back in February, breaking the level of, let's say, 2.5 pence, and above 2.5 pence we're looking for the 50-day line around 3.35 pence, and perhaps a retest of last month's resistance at 4 pence plus by the end of this month. The other positive here is the bullish divergence, so lower lows for the price, but equal lows there for the RSI, and we've got a bit of an MACD buy signal, buy cross going there as well. Wanted to look at Novacyt on the basis that it's interesting to see how the fundamentals of COVID and the testing situation works out at the moment. But if I can try and get the right ticker code here, we've got a situation where Novacyt has been on the back foot, I suppose, basically since the beginning of the year. We've had this, what hopefully is an exhaustion gap, but we need to get really back above the April support there around £3.61 on an end-of-day close or a weekly close basis to suggest that there is a bear trap effect in place. Otherwise, the gap down that we had last month, not a good look at the moment for the bulls. A couple of stocks left. First is Orphan. Here we've got a situation where we've got a rising trend channel from April for the channel at 35 pence, and while that floor holds, looking up towards the 52, 53 pence area over the next 1 to 2 months, so maybe by the end of next month for Orphan. The impressive part here really is the way that shares have been above their 200-day moving average, i.e. in a bull run ever since April last year. So that's a pretty impressive thing, and not something you see very often. So 50 pence plus, possibly by the end of next month for Orphan, while we're above 35 pence in the meantime. Finishing off with another stock which is on the ascendancy over the near term. We've had quite a pullback there, near the 40 pence level on Panthera Resources. Went down to 10 pence, so you had to have diamond hands for that one. Current situation looks like we're going to get an end-of-day close above that March peak at 16 pence, and while we're above that, or we can get that, then the target here is up towards 25, 26 pence to retest the February resistance at 27 pence, and that could be seen by the end of next month. At this stage, only really back below the 50-day line and the floor of the rising trend channel at 13.84 pence, really delaying the upside scenario. That's it for me today. More updates tomorrow.